What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting and the trading method that we use can be implemented with any company that's traded in the US stock market. So make sure you hit that like button if you enjoy this video. It really helps the channel grow. Thanks to all those who continue to tune in. If you haven't already, make sure you hit the subscribe and the notification buttons as well. That way you are alerted to when we release new videos. Bonus content, aside from the nightly and weekend videos. But the nightly and weekend videos, like tonight's video, mainly focus on identifying triggers and targets for trades ranging from scalps and intraday trades all the way up to long-term swings and leap trades. So if you want a deeper dive into exactly how we set up our charts, the different broadening formations, the color coding for the different time frames, things of that nature, check out the bonus content on our YouTube page. There's a couple of videos that dive deeper into that. So I do encourage you to watch the full video. Along with triggers and targets, we give some pretty good insight into price action on all time frames. So let's go ahead and take a look at today's agenda. First, we will recap the price action from Tuesday, December 2nd. Then we'll zoom out like we always do and take a look at things from the week, month, quarter, and year perspective. Then we'll zoom back in, look at the 4-hour markers and the triggers and targets for not only Wednesday, December 3rd, but we'll recap the triggers and targets for the week, month, quarter, and year. So just jumping into today's intraday price action like we always do, looking at things from more of a scalping perspective early in the morning. If you're familiar with this channel, then you already know what the rules are. If you're not, then here are the basic rules that we follow for the proven and repeatable strategy. We look for higher lows at or above opening print, and we want to get into calls. If we get a higher low at or above opening print, you want to get calls targeting the overnight high and previous high a day. Right now, if you get price action to the downside, right, if you get a lower high at or below the opening print, then you want to look to get into puts, and you want to target the previous low a day and overnight low. All right. There is a little bit of nuance that comes into play. This morning was a good example of that, and the more that you practice this strategy, the easier it'll be for you to see these nuances. But you can see our opening print was here, right in the gap, right towards the top of the gap. The gap is this blue zone here, or teal, or whatever you want to call it. We got an initial close of the gap with this wick, and then we pushed up, right? So if you were on maybe the 1 minute chart, there might have been a trigger for you. We didn't happen to be looking at the 1 minute. Wanted to try and kind of feel out this morning a little bit more than normal, just because of the push that we had overnight, and then the push that we had, the push that we had on Monday, as well as the push that we had overnight. Wanted to make sure that we weren't running into a short-term exhaustion situation. So we did push up, we pushed through the overnight high, and obviously we were above the overnight low with the gap up that we had. Again, that gap was closed pretty quickly early on. So no real triggers to get in on, if we're just looking at the 5-minute time frame. Now we did have a soft higher low here with this bearish engulfing candle, this 3, right? It set this low and pushed up. But one thing you want to look at is, at least from a strat perspective, we've got a 1-3 rev strat, or reversal strat here, right? You see the 1, which is an inside candle, and then the 3, which is an outside candle, or a engulfing candle. And a 1-3 rev strat usually goes in the direction of the 3, right? So even though we got a 2 up on the next candle, it really was setting up for a 3, 2 up, 2 down. And you could see that, we got a second 2 up, but it was pretty quickly pushed back down, beat back down. We had a doji candle up here, almost turning red. And so it turned into a 3 combo 2 up, combo 2 down situation, right? And we made a lower low here. So obviously it was creating a broadening formation from a 5-minute time frame, right? Wherever we would bottom out down here would create the bottom of the broadening formation, and you can see that here, right? So we came down, we made a soft lower high, and then a lower low. So technically starting a downtrend on the 5-minute time frame. But that 3 did set us up for 3, 2 down, 2 up, it did trigger, it pulled back, but it ended up going back in force in the next candle and finishing out the magnitude that it needed to reach, and gave us a higher high. So really just creating just another broadening formation here. So nothing really to go on early on, right? You could, let's see, yeah, we talked about this soft higher low. You didn't, with the soft lower high here and the lower low, right? It appeared to be starting a downtrend on the 5-minute, but we're above opening print and above overnight high. So unless you want to take the added risk, you want to stay out of the puts there. You could have taken them if you thought we were topping, right? Especially because we pushed back up here. Now we made a higher high on the 5-minute, right? Further creating the broadening formation. But it did pull back down and made the lower low, came down to this 5-minute broadening formation, which intersected with the area of support, right? We've got the gap. We've talked about how gaps can be areas of support. We've got the opening print and previous high a day. Overnight high here, right? So we pushed down, bounced off a previous high a day, and we started to push back up. Now, here we had a, oops, it's not what we need. There we go. We had another broadening formation form here, right, on the 5-minute. So you could see that it was really more sideways action. It was slightly down, but more sideways action than anything. No trend was really being chosen. But if you were continuing to watch the 5-minute, you would have seen this higher low here right at opening print. Now, a little bit riskier because the candle, it is right at the opening print, so it could push up and reject off an overnight high and just fall back into previous day's price action. So you would want to have your stops pretty close. We did not enter here, but we entered on the second higher low on the 5-minute chart, right? Didn't quite make a higher high, but recognize that it made a higher low at opening print, or just slightly above opening print, just slightly above the previous gap, right at overnight high. So it looked like there was some pretty good support here. So we got some calls for the December monthly. No, I'm sorry. We are in the second week. Yeah, second week of December. So we did the December 12 calls. Again, we have January. We have calls for January and beyond that we're just continuing to manage. But from an intraday perspective, we grabbed some in the money calls for December 12th. You can see we pushed up, got the higher high, got a lower low. If you want to look at this as your higher low here, it is a soft higher low though. We've talked about this before, how if it happens in just one candle, well, at least in Bullish Chips here, my partners and I, we consider threes or engulfing candles as soft higher lows and higher highs. So the key thing was here we stayed above overnight high in opening print, pushed up, continued to make another higher high, right, and then continued to just grind up through the end of the afternoon. We did get rid of the calls right here, so maybe a little bit early. We could have got maybe a little bit more at the end, but we were okay with the profit that we made, and because we did get this lower high. I'm gonna have to go back and look. I remember we did get stopped out here. I glanced up, and I thought we made a lower high, lower low. So it must have been the spread that filled our sale out there, because we did have a stop just below this higher low. I guess I'm looking at this more carefully now, but I guess the profit was made at that point. But you could have technically stayed in here, because lower high, higher low, just consolidation really. And you can see that we're at this 100% fib extension of the April bull flag, right? This 43.80 was one of the targets that we had on our triggers and targets yesterday. So we did, I guess, get out a little bit early here. But again, those were contracts just for next week. We're just continuing to monitor those January contracts and beyond. So a steady profit day, nothing huge, but we didn't lose any money, and we didn't have to stop out for even just the small loss or a break even. So overall, a good winning day. Some extra money for further investments, or maybe a little bit of fun, but yeah, it was a decent day today. So also another thing, what was this? I think it was around here. Was it here? One of these two was a higher low on the 15 minute. Let's actually bring it up. That would be really easy to do. And we can see, yeah, was it? Yeah, about noon Central Time. This was a higher low from the 15-minute perspective. So if you're looking at things from the 15-minute, obviously you could have got in here. You remained making higher highs and higher lows into the close. So it would have been up to you whether you wanted to swing them. It really depends on, what your expiration was, what your strike was, things of that nature. So we did have, I forget, somebody has earnings after hours today, and it looks like, the market is, or at least SOXL is up in after hours, right? Up about almost $1 at this point. So those are right now looking to be a good swing if you did swing those. And we're continuing this push up, this bounce, making from the the higher low on the week perspective, and just continuing to move up. Right, we talked about how we changed the uptrend. The downtrend to an uptrend on the 1 day chart. Oh, what happened to the chart? There we go. Let's make this a little bigger for those on the phone. There we go. Right, so we did get the soft higher low here and the continued push, but I personally and my partners and I, we do expect to see some type of pullback to give us a more solid higher low before making the higher high on the week time frame. Now that's yet to be seen, and we don't really like to get into predictions. It's not something that we're saying is going to happen, but it kind of feels like we would need a more solid higher low on the day time frame before making that higher high on the week. But we could just continue to push up like we do a lot of other times with SOXL. You can see just up. All right, this is the day chart. Right after that 11-week range, we just had just a bunch of up days. So it's very possible that we just go make the higher high on the week before we get any real solid higher low on the day. But I would like to see a solid higher low on the day. Add some more to my positions there, long positions there. If we get that, makes it a little bit harder when you're just trying to catch the top of. You see each day is two up. So it can be hard sometimes to just buy the top and just hope that we continue to go up. I admit I do it sometimes. I try not to do it. I really try to wait for triggers. But sometimes with SOXL, you just got to get in and set your stop and enjoy the ride, right? So everything's still looking good. Real good bounce off of the year flip. Last quarter's 50% level. We talked about all those support levels that we had there. So looking real good from the day chart. From the week, looking real good as well. Let's get a cleaner chart out here. There we go. Right, and this is what we were talking about with the right. So here's the bull flag from the April 7 low. Right, here's the flag pull. Here's the flag. We got the bounce, and then here is that higher low that we set. Really locked it in last week by going 2 up on the week last week. Locked this in as a higher low on the week chart, right at above that major support. Right, 11 weeks of sideways action here between 24 and 28 that we had. Bounced off that very nicely. Got a nice wick, good solid candle for follow through on both last week and looks like this week as well. So, from a week perspective, things are looking great, right? It might have seemed scary during these 3 weeks of pullback, but we continue to tell you through those 3 weeks that we're not breaking down from a perspective of the week chart or higher, right? We were having a pullback. These types of pullbacks are pretty normal, right? So you get like at least once a year. So nothing to be too afraid of there. Let's zoom out a little bit more and look at the the month chart. And we're getting ever closer to putting in that higher low, right? We're an inside candle this month. We put in that 2 down last month, but really, kind of hammered up here. It's not not quite as small of a red body as I would like, but it still showed, the action of the bear, bears pushing down, but the bulls fighting back. And then this month, we're back in that upper third of last month's range. And if we can push up and get that 2 up, lock this in as a higher low on the month time frame, that would look really good for the trend on the month chart, right? We were in a downtrend here, lower high, lower low, lower high, lower low, right? So we bounced, we pushed up, we made a soft higher low here. this looks to be a more solid higher low, right? So this is kind of like how the day chart looks, right? But we're just looking at the week. So on the day, right, we've had two ups, the reversal with a soft higher low here, and we're looking for that more concrete higher low, right? And that's what it looks like we're getting on the week time frame. So we may not get that solid higher low on the day chart now that I'm looking at it, right? Especially if we go two up here, we could just continue to push up. But it is something that I'm still looking for on the day. But anyways, on the month chart, just like with the week, nothing to worry about. Looking pretty bullish. Neutral at worst. Maybe we range up here. Struggle with last year's 50% like we did previously. That could be a possibility. But we just want to continue to see the price action stay in this upper half, upper third of last month's price action. All right. If we zoom back out to the quarter, same type of situation here, right? There we go. On the quarter, instead of a downtrend on the that we're bouncing out of, it's just a broadening formation, right? We came from a higher high to a lower low, so just bouncing from the bottom of the broadening formation. But we did have this one combo two down, combo two up, right? That triggered with the magnitude up here 70.08, right? It triggered here at the high of this first two down, so 36.15. As long as we're above 36.15 on the quarter, we're looking good. Okay, we don't want to see this pullback at the end of this quarter, because if we pull back, that lessens the chances of going two up early. In 2020, the first quarter of 2026, it kind of increases the chances of going two down on the quarter, which would lock in a lower high. So we don't want to see that pullback into the end of the quarter. We want to see that continued push up, which rolls us into the year chart, right? We want to see the continued push up, because we came from this 1 2 up 2 down that had a magnitude of 621, right? We pushed down, but we were lucky enough to make a higher low at the 723 level. So from the year chart, we're making a higher low. If we can finish this as a nice hammer candle, towards the top of the candle, it gives us a good chance of going two up in 2026, and that triggers then the two down, two up with the magnitude of 70.08, just like on the quarter chart, right? So from high time frame perspective, everything's still looking good. Even short time frame perspective, I can't really say too much negative, right? The only thing I can say is from the short term perspective, we've been on a nice little push here, so it wouldn't be too much to expect some type of pullback. But again, when I talk about the price, overnight price, we're up again almost $1 with it wasn't Micron, Marvell, I believe, was reporting today. So I think they had good earnings. They must have forecasted or guided well, because it looks like SOXL overall is up. So maybe we don't get the pullback tomorrow. Not that I was calling for it tomorrow, but it was just, in my opinion, a higher probability that it could happen, right? So let's go ahead and zoom back in, check out things for tomorrow. First, looking at the chart from a scalping perspective, we can see we've got our 4-hour markers on the chart. We've got the previous low a day, overnight low as of now, previous high a day, and overnight high as of now. Right, overnight high, overnight low might move, but let's get out the right tool here. Let's say tomorrow opens, in the middle of the overnight range, basically right at previous high a day, right? Say we open here and we push up, and then we maybe get a little rejection off of overnight high and we pull back. Well, if we pull back and get this higher low at or above this opening print or this opening trading price level, then we want to look to get into calls, right? First targeting overnight high. Well, that doesn't give us very much magnitude. So obviously we're not going to unload those contracts at overnight high, even if we get the best entry here right at opening print. It's not enough to go for. I mean, if you're in the money, weekly calls, and you get your perfect entry, perfect exit, okay, you got multiple contracts, okay, I see where you're coming from. But if you've got a contract that expires next week and you're looking to stretch this out for a couple hours, maybe a full day trade, obviously overnight high is not going to be where you want to release things, release your contracts, and you're obviously over previous high a day. So This is where our triggers and targets on the 4-hour time frame and the 1-day time frame will come into play. We'll go over those in a minute. So the main thing to just keep in mind is that we're looking for higher lows at or above opening print to get into calls. At the same time, if we open here and we push down, maybe we get a bounce off of this 100% fib extension here, we push back up and we get a lower high at or below opening print, we want to look to get into puts, right? First targeting overnight low, and then second target is previous low a day. And obviously, if price goes below previous low a day, then we look at your 4-hour and 1-day triggers and targets. But that's what we're looking for, and especially early morning, looking to try and get into the what if the day is going to trend, get into that trend early, try and get as much out of that day trade that you can. The strategy is higher lows at or above opening print, look to get into calls, lower highs at or below opening print, look to get into puts. Okay. Let's zoom out for more of that, day trade perspective, not so much scalping perspective, right? We can see that we've got kind of a range here that we've been trading in for a few weeks, right? So even if we continue to push up, we talked about earlier, last year's 50% level, 46.79. You can see how it was resistance here, slight support here, but resistance. It could just be resistance again, right? We've got a weekly broadening formation, this purple solid line going diagonally right here, intersecting with last year's 50% right about here. And we have this 1-hour broadening formation going up that intersects with them right there as well. So we've obviously got the market maker's expected move high here at 45.44. If you're not familiar with that level, check out our weekend video. We dive deeper into the market maker's expected move in that video. But we've talked about how that's not an end all be all. The price doesn't have to turn around there. So if we do push up through previous high a day and through market maker's expected move high, look for that 46.79 area to be not necessarily a point of rejection. It's not like we have to hit here and pull back. We could just hit here and move sideways to the end of the day, right? But that's what my partners and I are. This was initially our target for the week. Obviously, we're getting a lot more movement, so we're looking at moving that to the target for the week to 50.19. But definitely tomorrow, 46.79 is the level to watch for us, right? That's to get to that level, you would have to get this 2-1-2 up to trigger, right? So a continuation pattern, not a lot of magnitude here. So you wouldn't take it just for the 4-hour strat. You would obviously be taking it for the follow through up through, but just from a strat perspective, you would have a 2-1-2 up continuation if we go to the upside. Now, if that first 4-hour candle goes to the downside tomorrow, or on Wednesday, depending on when you're watching this, we would get a 2-1-2 down, triggering at the low of the second 4-hour candle from Tuesday, and the magnitude of that move would be 42.03. So you should expect that if we break below this, there's a good chance that we could we should go down and hit the previous low a day. Now, one thing to think about, little nuance here, we're in an uptrend, right? So you may want to temper how much you think we're going to pull back, especially with the type of uptrend we've been in. It's just straight up, right? So we've got some economic numbers coming out tomorrow as well. I think like 20, 30, or 30, 15 and 30 minutes into the market being open, if I'm not mistaken. It may be 30 and 45 minutes. So just be aware of that as well. If we do get the downside action, right, that triggers a 2-1-2 down. But if we're looking at just the two candles, it'll be a 1-2 down. And depending on how that candle finishes, we could just be setting up for a 1-2 down, 2 up, back to the upside. So again, more magnitude to the downside, but you've got to think about the trend that we're in. So you want to temper your expectations to a point, right? Let's go to the day chart. Right, we're obviously continuing to go 2 up on the day. Let's get a better chart here. There we go. We're obviously continuing to go 2 up on the day consecutively, right? If we go 2 up, we've got the continuation. And again, that 46.79 is that level that we're looking at for tomorrow. It'd be about a $2 move, almost well, depending on where we open. If we open around where we are right now in overnight trading, it's about a $2 move. If we go back to previous high a day, it's about a $3, or to where we closed, I'm sorry, that's about a $3 day. But either way, SOXL could do that in a day, no problem. So want to continue that momentum, continue that push up. Looking to get to that 46.79 level. Now, if we get the 2 down, right, if we go below previous low of day tomorrow, then we have this 2 up, 2 down. It would trigger at the previous low of day, and the magnitude would be the low of the previous day, which is 39.46 down here, basically the week's opening print. But again, we're in an uptrend, so kind of temper your expectations. We could just get the 2 down, and poke and hammer back up, so we get a failed 2 down, and we're just right back off to the races. So again, I'm not getting any predictions, but I'm just laying out the possibilities tomorrow for both the upside and downside. Let's go ahead and go back to our notes here so we can just look at the hard numbers, right? So for Wednesday, December 3rd, there will be 19 trading days left in 2025, and the close price on Tuesday, December 2nd was 43.80, right? We know that the week, month, quarter, and year are all green. Here are the levels that they would need to turn red, right? So we've got full time frame continuity to the upside. So something else to think about if you're planning on buying puts, right? You've got the bulls are in control here. It's pretty evident. So just temper how much your expectations are, right? We talked about the market makers expected move being $4.18 plus or minus, giving us a range of 45.44 to 37.08. Obviously, we are very close to that 45.44 level. But again, that's not an end-all be-all level. Price doesn't need to turn around or go sideways at that level. But it is a point of inflection based off of the open interest on the options chain. Okay, we know where the gaps above are and the gaps below are. Almost had to add another one to the gaps below, but we closed it this morning. So we know it perfectly well where those are all at. We talked about from a scalping perspective, we're just looking for higher lows at or above opening print to get into calls, and lower highs at or below opening print to get into puts. Looking at things from a little bit longer time frame, right? Doesn't necessarily need to be a full day trade, but it's not a scalp. Looking at the 4-hour time chart, if we go to the downside, it's a 2-1, 2 down reversal, triggering at 43.36 with the magnitude of 42.03. And if we do break 42.03, we've got an extended target of 41.33 listed here. To the upside, we've got a 2-1, 2 up, again triggering at 43.31. Not a lot of magnitude there, giving us the 44.61 and the extended target of 45.54. Right. On the day chart, we talked about if we go 2 down, that's a 2 up, 2 down reversal, triggering at 42.03. Magnitude of 37.03. Actually, did I do this again? Let's go here, right? So this 42.03 is the trigger, and the magnitude, 39.46. 39.46. Didn't do our homework here. I apologize for that. So, right, again, 2 up, 2 down, it would trigger at 42.03, and would go to the expectation would be it would go to the low of this candle, which is 39.46. 39.16, we could leave out there, but it's pretty close to that. It's last month's 50% level. We'll just go ahead and use that anyway, 39.16. All right, and we'll be able to judge a little bit better at the time what exactly is happening. Now our target would be the close here, right? 41.31. If we're choosing a level that we could bounce at before we get to the actual magnitude of the move, right? So the close is 41.31. 41.31. So that is the target. Remember, we want to, because we are in this uptrend for those downside moves, we do want an intermediate target if the magnitude is a reasonable distance away, right? If it's a short distance away, $1 or so, don't necessarily need an intermediate target, but you can see 42.03 to 39.46 is a good $2.50, almost $3. So we do have this intermediate target of 41.31, but the magnitude of this 2 up, 2 down move is 39.46. Should we really get moving and we get past that previous low a day, we've got an extended target of 39.16. And then, if we really get that low, then we can, reevaluate things at that time. But don't necessarily see us getting too much lower than 39.16 tomorrow. If we do go to the upside, again, it's just a 2 up, 2 up continuation. That triggers at 44.61. And we have an extended target, a target of 45.54 and an extended target of 46.79. Okay. We talked about the week. We won't go back to the charts here. We talked about the week. We triggered the two up continuation yesterday. It did close below the 41.33, so it was not enforced. Well, we're definitely above 41.33 now, so it's back in force. So we're back in bold. First target of 43.80. Well, that's where we closed today. So we do want to see these next targets of 45.52, 46.79, like we were talking about, is last year's 50% level. And then 47.78 is the further extended target that we have there. The 50.76 is last month's high, so that will be on the table as well if we do get past that 47.78. But again, just want to temper our expectations and take things a day at a time. From the month perspective, the month is green. We are still inside month, right? So we haven't triggered the 2 up or the 2 down. Got to get down all the way to 28.12 to trigger the 2 down. So don't see that happening, tomorrow or the next day. We do got to get to 50.19 to go 2 up on the month. And oops, that's the high of last month, not the 50.76, but the 50.76 is a higher high on the week time frame. The 50.19 is the 2 up trigger on the month, last month's high. If we do trigger that, there's not a lot of magnitude to that 2 down 2 up reversal. It just about 50-60 cents to 50.76, but we do have our extended targets listed here. All right, we talked about on the quarter. We've triggered and we're back in force on the 1 combo 2 down, combo 2 up. So as long as we're above that 36.15 level, we're just looking for our targets on the way up to this magnitude of 70.08. And then we talked about the year. The year is back green after going 1 2 up 2 down. But again, we did not quite make this magnitude of 621, went to 723 in April, giving us a higher low, and just trying to finish the year up, solidly towards the top of the end of the year candle. Right? Or I'm sorry, not end of the year candle, solidly towards the top of the year candle. All right. So there you have it. There's your triggers and targets for everything from a scalping perspective all the way up through the 1-day chart. We hope it was informative and helpful for you, those of you watching, or even just confirmation of what your triggers and targets are if you already had yours listed. But yeah, we just tried to jam as much information in there as we could without taking up too much of your time. So we'll stop babbling now and go ahead and end the video like we normally do. If you made it this far, give us a thumbs up, right? It really helps goes a long way to help the channel grow, and lets us know we're helping you out there. So it's a free channel. We don't ask for any membership fees or anything like that. So we just hope that you can give us a free thumbs up at the end of our videos if you make it this far. But yeah, if you don't, that's fine as well. We just are trying to put out as much good information as possible. But if you're watching this Tuesday night, make sure you get some good rest. Wake up refreshed tomorrow morning. If you're watching this Wednesday morning, we hope you got some good rest last night and you're feeling refreshed this morning. And we look forward to getting out there and trading with you.